US stocks have risen this week and the US dollar has fallen sharply, yet gold has seen its strongest weekly performance since the Lehman Brothers collapse in 2008, as markets have had a reality check. Concerns over trade tensions, the US government shutdown, stretched valuations, and credit risk have impacted direction. But what should we be watching this week? To talk us through this, I'm joined by Global Head of Content, John Kicklighter. Thank you for joining us, John.
Thanks for having me.
So after that recent grind to record highs, we've had a reminder that there are still risks out there. What are the general market conditions we should expect to deal with next week, and what markets are you watching?
It's interesting that we've had this consistency, and we've talked about it week after week, that it's just a steady march higher. And the prevailing trend has always been bullish through that period. And I still think it is bullish, but I think what we saw this past week is there's a little reminder that yes, there are risks out there, and yes, the markets could go down, but they're not necessarily biting on the significant pullback. We had that shakeup of the credit concerns that you mentioned from Western Alliance and Zion. So Western Alliance was actually one of the names that popped up in 2023 with a lot of people thinking about that collapse of SVB, Silicon Valley Bank, and stirring up a little bit of fear. But it's not, I think, enough to really knock the markets off their course. But we do see in that reminder that the concerns are there. I look at indicators like the CNN Fear Greed Index, which is a very good rudimentary broad measure of sentiment, that you can still have fear even as the markets march higher. But if you're looking for turns, which major turns and trends don't occur, but very infrequently, then it's better to look for confirmation, to be patient, and to really see the sentiment change across the board. And I think until that happens, it's going to be maybe some complacent or irrational exuberance, but it's still bullish and leaning. So I'm going to be keeping that eye on some of those risks and seeing if they actually garner more traction than what we saw from those bad loans concerns. But in terms of what markets to watch, I think you're absolutely right on gold, that steady march higher, and not even steady, it's actually accelerated. I think it's a convergence of so many different fundamental themes that are still prominent right now, including the risks and the positives, the anti-dollar, the anti-fiat, the safe haven, as brief as it was, appeal, all of that converges on gold. I think you're also seeing some interesting movement in U.S. Treasury yields. So the 2-year yield perhaps is the more interesting one to watch because it is aligned to interest rate expectations, and the FOMC rate decision is less than 2 weeks away. And of course, I'll be watching benchmarks for risk like the NASDAQ 100 and even crude oil as a grounding on what's the actual economy look like. And I think that that's a more practical commodity for measuring those types of things outside of the ebb and flow and the irrationality of sentiment.
And you just briefly touched on themes there, but let's delve a little bit more into those themes. What are you going to be watching as themes that could potentially upend the calm?
There are multiple themes, and it's just dependent upon what the market wants to pay attention to. I mean, it's almost, depending on what news you follow, it's almost easy to forget that the U.S. government is still shut down. I think it's day 16 as the time of this recording, and there doesn't seem to be an end in sight. And this is a significant influence in terms of not just economic restriction for the United States as far as economy. It's also a burden on the financial system and the perception of treasuries as being the unquestioned reserve, which was already under question. So that's a major theme, and we want to see if it comes back or if it's resolved, if there is a bump in risk, even though we haven't had much of a discount of the risk that it implies. I'll be watching themes like monetary policy as well, because even though the FOMC is in its blackout before its rate decision the Wednesday after next, you still have a great degree of uncertainty. You have aggressive calls from certain Fed officials calling for 25 basis points or 50 basis point rate cuts, even though we don't have the data that would back it up typically through non-farm payrolls, which we still haven't received, or the CPI, which is theoretically delayed until this coming week. And of course, I think it's very important to watch growth because in the absence of clear, decisive event risk, we actually have some decisive growth readings through this coming week. So maybe the markets will seize on it because there's something a little bit more tangible there rather than just going with the flow in terms of sentiment.
And then drilling down further, what is the top event risk next week, so it could be the catalyst to spur off these themes?
So through the coming week, we have quite a bit of event risk. I would say on Monday, you start off with China GDP, which is a big one, second largest economy in the world. And of course, there are a lot of considerations there, including trade and extended lending considerations and bad loan questions, housing market contraction, all those major themes consolidated into one important reading. But we also have September Chinese data as well with the run of the most recent updates there. So that's worth watching. Also on Monday, I'd watch something like the Leading Economic Indicators Conference Board reading for the United States. That is going to be, people are really going to have to scratch up key event risk because there's a notable absence of it. And that could be a good aggregator and actually an outlier for South America. You have the Argentine trade balance, which given the bailout that they've recently received from the United States, I think that's going to be increasingly interesting from the financial perspective. On Tuesday, I think we have a long run of earnings, major defense companies. You have GM, you have Coca-Cola. All of those are worth watching as a broader mix of the economy. This past week, we had the financial updates, and the banks, always working with GAAP, did well. But we want to see how the broader economy is doing, and not necessarily just the earnings of the financiers. And also on Tuesday, you're going to have Canadian inflation. And after the bell on the close on US, you're going to get Netflix earnings, which is a bigger tech-oriented company to watch. Wednesday, maybe UK inflation, the highest inflation forecast of the G7, according to the IMF's forecast. So that's going to be one to watch in terms of what it does to UK economy, also the British pound. But then after the bell on the close on US, you're going to have Tesla earnings. Maybe not as distinctive as maybe an IBM, because it's as close as you're going to get to AI. I think you're going to get a lot more interest, and obviously we have to wait for subsequent weeks to get more of the core AI Mag 7. But I think that's going to nevertheless cause a lot of interest and potentially some volatility that spills over outside of Tesla shares. Thursday, you have some sentiment figures like Eurozone consumer confidence. You have the Chicago Fed's National Activity Index. You also have some earnings after the bell, including Intel and maybe Ford, to see how the auto industry is doing. And Friday, we'll see if it hits the wires, but the US CPI. And obviously, that would be a critical update before the FOMC rate decision the following Wednesday. So we want to see if there is any tangible data, because it's kind of a difficult decision to make that you want to cut rates again subsequently without decisive data when you are saying you're said to be data dependent.
Well, thank you very much for your insights once again, John. Great to catch up.
Thank you.
For more videos like this, please do like and subscribe.